You see a massive green candle swallow the previous red one. The setup looks perfect. You slam the buy button. But within minutes, the price collapses. Your stop loss triggers, and you're staring at a red screen. You followed the textbook rules, but you still took the hit. To understand why, let's look at the mechanics. An engulfing pattern is a two-candle sequence showing a rapid power shift. A bullish engulfing has a small red candle followed by a large green one that completely swallows the first candle's body. A bearish engulfing is the exact opposite. Most traders memorize this specific shape and start hunting for it on every chart. They fixate on the geometry of the two candles while completely ignoring where those candles are actually forming. An engulfing candle is essentially a loud alarm. It tells you there is a sudden surge in momentum. But if that alarm goes off in a building that isn't on fire, it's a false signal. In a directionless market, that pattern means almost nothing. Without evaluating the surrounding environment, trading these raw textbook shapes is a fast way to drain your capital. They are just chaotic market noise. To separate the signal from the noise, we have to apply a systematic series of filters to the chart. Doing this eliminates the vast majority of low-quality setups. Filter 1 is market context. We only look for patterns that form at absolute boundaries. This means a major support or resistance line, or the very end of an exhausted trend. When a bullish engulfing pattern materializes right on that bottom support line, the probability shifts. It shows buyers actively defending a specific, proven price level. This volume bar graph below the support line acts as our second filter. A valid pattern needs a massive spike in trading volume. High volume on a green candle proves that institutional buyers are stepping in with real conviction. This is an RSI line graph, which measures the speed and change of price movements. We are looking for RSI divergence. That happens when the price drops, but the RSI line ticks upward, showing that downside momentum was already fading before the buyers even arrived. By stacking these three factors, context, volume, and momentum, you transform a weak, isolated guess into a mathematically backed trading signal. Finding the right setup is only the first step. The next challenge is executing the actual trade with precise timing. The aggressive entry method involves executing your order the exact millisecond the engulfing candle closes. You get in immediately, ensuring you don't miss a sudden price surge. The drawback to this approach is that you often buy at the absolute peak of the immediate price swing. If the market naturally pulls back right after you enter, you start the trade in the red. The conservative entry requires patience. You wait for the price to pull back exactly to the 50% midpoint of the engulfing candle's body. When the descending price line kisses that dashed mark, you get a much better entry price. For a bullish setup, your stop loss goes exactly here. That heavy red horizontal line sits just below the lowest wick of the pattern. If the price drops below that floor, the trade logic is instantly invalidated. Combining calculated entry timing with an uncompromising emotionless stop loss is how you protect your capital when a setup eventually fails. Even with perfect filters and exact entries, this system falls apart without strict risk management. You must strictly control your position size. A professional trader never risks more than 1 to 2% of their total account equity on a single engulfing setup. This visual scale illustrates the 1 to 2 risk to reward ratio. If your stop loss limits your risk to $50, your initial profit target, placed at the next major resistance level, must aim for at least $100. Maintaining that exact ratio ensures your account continues to grow over time. The math dictates that your winning trades will outpace your losses, even when some of your heavily filtered setups fail. You are no longer reacting blindly to random shapes. You are waiting for specific mathematical criteria to perfectly align before you risk $1. To execute this strategy effectively, you need institutional-grade tools. FXNX provides advanced charting, 0.0 pip spreads, and the NX AI pattern tool to pinpoint these high-probability setups in real time. Stop trading the noise. Open a free FXNX demo account today to backtest this exact filtering strategy with live market data and zero financial risk.